Thanks so much. Oh my. Okay. Thanks everyone for being here. I'm really, really excited to debut Kate's book, but also to have these two brilliant thinkers in conversation. I read both these books kind of back to back, and I think they're such a beautiful complement to each other, unpacking some very distinct but overlapping themes about basically everything that's kind of going wrong with the way our economy runs and the way our world works. So I'm really looking forward to this conversation. I'm going to start, Kate, with you, as this is your night. And without kind of diving too much into the details of the book, because we'll have to, leave them something to read. But maybe just give us a sort of introductory synopsis, if possible, of just why privatization has been so detrimental to not only the public services that were privatized, but to the kind of wider functioning of the UK economy. And again, that's a tall order, so a kind of bite-sized summary, if it's possible.
Okay, thank you. Thank you for coming, everybody. This is all very exciting. Okay, so privatization. So privatization was flagship policy of the Thatcher government in the 1980s. And it began with small-scale privatizations, began with the sale of council houses being sold to their tenants. There wasn't really a grand plan at the time, but it kind of incrementally proceeded. So beginning with small-scale privatization, it led to the privatization of huge utilities and a complete transformation, really, of the way public services are provided. So outsourcing became a kind of default rather than having to be justified in any other way. So the main aims of privatisation at the time were to reduce government spending, to reduce public sector debt, but also it was driven by a kind of neoliberal ideology towards market forces, leading to an optimal kind of distribution of resources and increased welfare as a result. But also it was a political project. Thatcher herself says it was associated with, reversing the corrosive effects of socialism. But ultimately, it was about creating a sort of property-owning, shareholding, Tory voting population. 40 years on, so where are we now? Well, I mean, my book looks in detail at water, energy, and social housing, and I've also worked on health and social care. And all of these are in crisis. There's sort of common themes of high profits for investors, offshore ownerships, opaque corporate structures, high debts. And at the other end, we have deprivation for poorer households, not being able to access services. And so I want to make 4 points on this, actually. I made some notes on the train. So first of all, rather than creating a sort of dynamic market forces type of structure, what we have is some enormous companies behind these basic services. And we have the same companies, same global investors working across sectors. So big investors like Macquarie work in water, they work in gas, they work in rail, they work in right across the board. And other companies as well, as CKI, a Hong Kong-based company. So there is huge power in and wealth and power in the ownership structures behind the bills that we pay. And these companies, they buy and sell ownerships of stakes of our basic services for billions, but this doesn't necessarily reach investment in the services. This is just buying the right to the revenue streams from us meeting our basic needs. And they make money not necessarily by producing efficiently, but by financial engineering, which is something, Hetty can tell us all about as well. Second point to make is that regulation can't keep up with this. Regulation was designed with this kind of traditional market-based private sector in mind, but we've seen the private sector surprises us again and again. So in water, we found they set up structures via the Cayman Islands to increase debts, which made the companies very fragile. We found that companies weren't investing in sewage infrastructure, but this only comes to light a long time after these events are happening within the companies. So regulation is impossible. It's impossible, I don't think, for regulation to keep up with what's happening in the private sector. Third point I want to make is that it's really important to maintaining these systems that there's a shared worldview that these are private commodities being bought and sold in a market system. So this shapes how issues are perceived by people in the sector, policymakers, and it shapes what the solutions are deemed to be. So this market system is really important because it seems then like a sort of technical fix, a kind of neutral system, and the underlying real world issues of power relations and class structures, inequality, histories, they're all wiped out when you have this technical market view. And the market then normalizes the high profits that are made. They're seen as kind of returns for business acumen. And it also kind of normalizes social exclusion. It becomes the user's responsibility to be able to, to change their energy provider, to use less water, to save for a deposit for a house. So that market structure is really important in shaping the power relations, and then also the response from policy is we need to make it more competitive. The Competition and Markets Authority is really deeply involved in finding solutions to the issues of these sectors and problems of the crisis that we're seeing. And the final point I just want to make is this privatized model makes it really problematic when we're trying to meet basic human needs. Social provision for disadvantaged households needs to be mediated through the interests of the private sector. So it needs to work through market logics. We see this in the water sector. We see sort of small cross subsidies between households being the kind of solution to affordability issues. In energy, we see customers should be more effective at choosing their providers. Privatization has really weakened our ability to meet basic human needs. Like in dentistry and social care, there's whole areas that are described as dental deserts and care deserts, because there's space at the front for you two. Yeah. I've completely lost what I was saying. Anyway, that's about it, really. It's really weakened our ability to meet human needs. It's hollowed out our capacity, and it's created very precarious structures where we are at the whims of global capital.
Brilliant introductory synopsis. And I can't blame you for getting flustered as 3 legends of privatization research entered the room mid-flow. So I understand. I want to pick up on a lot of those points, but maybe, Hedy, I'll come to you for a minute. And I think something that your book does so interestingly is you focus on private equity in particular, so this kind of very specific sector of finance and its role in this process that Kate's been describing. And I wonder if you could elaborate a bit on something that you said to me in a conversation that we had for The Breakdown, which is a podcast I work on. And you said that private equity is almost a form of double privatization, this kind of second tier beyond this initial process of privatization that Kate just described, which sort of compounds all of those negative impacts. So I wondered if you could just expand on that idea a bit.
Yeah, and it's a real honor to be here, partly because it was Kate's paper on water that actually kind of got me thinking about that, in the sense that you had this paper where you tracked the extent to which privatized water companies, which were initially privately, well, not privately owned in the sense of private equity ownership, but they were publicly listed at first. And there was this idea that actually it was perhaps more possible to hold them to account because of that. And then what happened is most of them got bought up by private equity funds. And I do think that private equity is a kind of secondary form of privatization, in the sense that it is more inscrutable, more opaque, more difficult for civil society to hold it to account. And there is a real sense in which, as Kate has said, regulators just can't keep up now. I wanted to, I suppose, look at some of the people and the financiers and the people who have, the victims of this model in the book that I wrote, and really bring that to life by speaking to people who didn't just disagree with this, but had actually made money from this and thought perhaps it was a good idea initially. And then to hear from them how they felt as though the privatization kind of process had actually been perverted or thwarted or otherwise by what has since happened. And what since happened, Kate obviously mentioned the kind of 40 years on timeline that we're now seeing the effects of these decisions that were made quite a while ago now, is that private equity has emerged as really the dominant owner or style of ownership when it comes to public assets, whether that's water or housing or care. And I was just really taken aback by that. I think as a journalist, I was used to looking at subjects such as housing and interviewing people and reporting on these. And I kept coming up against the names of these same companies that were either private equity owned or owned by kind of real estate investment funds or infrastructure funds that really have adopted the private equity model. And it just really was everywhere I looked. And so I felt as though actually that almost had the kind of outlines of a conspiracy theory. Perhaps it's because I'm a journalist, I'm kind of looking for the drama in this, but I think it was really intriguing to me at first. I think it's helpful just to quickly define what private equity is in order to understand, I guess, the significance of the points that Kate was making in that paper that I mentioned and has made since in this brilliant book. Private equity, when I explain it to people and try and kind of convey it simply, part of the clue is in the name private. A private equity fund has historically bought up a company and delisted its shares from the stock market, taken it private. And that means that as a type of ownership, it's much more opaque, it's much less transparent, it's much more difficult to hold to account. The mechanism at the heart of most private equity deals involves something called a leveraged buyout, which is where a private equity fund will buy a company using lots of borrowed money and push the responsibility for paying off all of that debt onto the company that it has just bought. In effect, the company goes into debt in order to pay for itself. And it was actually through spending a lot of time looking at water and speaking to and kind of tracking the movements of various campaigners, particularly in Yorkshire, actually. I spent quite a lot of time there when I was reporting the book, that it led me to be really interested in the way in which this particular style of ownership raises a new set or a kind of more difficult set of problems to deal with. And I wanted to know what the original architects of privatization would have made of this, as I said. So I ended up speaking to one of the founding directors of Ofwat, who had worked with Nigel Lawson as who was one of Thatcher's major ministers on the kind of privatisation architecture of the UK. And I went up to see him in Birmingham. I remember knocking on his door and wondering if he was going to answer. And he invited me in, and we had tea in his kind of very grand house. And he kind of said, the problem with all these private equity funds is that they've really thrown dust in the regulator's face. They've made it really difficult to scrutinise what is going on because they are more adept at financial engineering, because of the kind of problems with opacity, the use of offshore structures, and so on. And it feels as though regulators have been left in a position where they're kind of trying to run to catch up. And so to me, I think that speaks to the way in which we are now seeing, as Kate said, the effects of this and how it has morphed and become transfigured into something that I don't think politics is really capable of holding to account in the ways that we might hope that it would be.
Can I just add something?
Absolutely.
Can I just add something on, first of all, you should all read Hetty's book. My book is like lots of facts, and Hetty's full of really interesting stories and people and all that sort of stuff. It comes to life in a great way. But on companies, so private equity, as Hetty says, has major problems. But doing my research, I came up against the issues of the listed companies. So I've always had this idea that listed companies are kind of more benign, but looking at them more carefully, you see the same companies are represented across the different structures, different sectors. So energy, water, housing, BlackRock has shares in all the companies in all the sectors that are listed. And then, BlackRock's CEO was having breakfast, wasn't it, with Keir Starmer. So it's a different kind of power leverage going on there. which I think also needs unpacking. Private equity certainly has changed the game, but let's not forget the other types of privatized structures that also have their problems.
Well, I want you to both step into the shoes of your enemies very briefly, because I think, despite all of these many kind of detrimental currents that you've described, nonetheless, private ownership and privatization in these sectors persists, and so do the kind of myths and narratives around the kind of justifications for organizing systems in these ways. And so I wonder if you could, put that hat on, put Larry Fink's hat on, put Rachel Reeves's hat on, etc. I'm sorry. And maybe walk through how these things could possibly be sort of justified on their own terms, some of the kind of key myths that continue to undergird this organization of systems, and maybe what those myths get wrong. We'll start with you, Kate.
Okay, thank you. Well, the big issue has been water nationalisation. So DEFRA's putting out this figure of 100 billion being the cost of taking water companies into public ownership. I think it's also worth noting that they're saying the reason for not nationalising is that it's really expensive and would go through a lot of legal loopholes. No one's actually saying it's a good thing anymore. They're just saying we can't get out of it. Oh, what are we going to do? We just have to stay where we are. So it's quite clear that it's not working. But this 100 billion figure, a lot of people in this room know that it's kind of been artificially created. It's based on something called regulatory capital value, which is reflects what companies have invested over the years. But it doesn't reflect that companies have borrowed to do that investment. It doesn't reflect that companies have taken out 85 billion in dividends. And 3 of the companies are still listed on the stock exchange. So if you took their market value, because you can see the share price, so the market value would work out as being about half the 100 billion, I think a bit less. So obviously that brings it down a lot. But then why would you take the market value? Because the market value of shares is what companies are expected to make in profits from owning these assets, which is why it's all been so problematic. So we don't really want that to continue. So really an evaluation in a nationalisation would go through the courts, and that would be based on all kinds of factors. One of the factors being how much it would cost to put right what hasn't happened, the investment needed. And when those costs are brought in, some campaigners are arguing that the companies are effectively insolvent and so could just be handed over into without any cost. But the big issue is Thames Water. Thames Water is really it's failed its it should have lost its license over and over with what's going on, and it should be taken into special administration. These are the rules of the game. This is what should happen. That means taking it into it's like going bankrupt, but different for a public utility. So why hasn't that happened? That's a big question. And I don't know the answer. There's various speculations that I've heard, but basically people are saying that it would just upset the investors so much that it would cause mayhem. This is what I've heard informally. And the government's too scared, really. I don't know. People in the room probably have more information on that. But I think behind the scenes, we don't want to upset global capital, which then calls into question the whole way we're supposed to monitor. Can we really monitor? Can we really regulate global capital at all?
And Hetty, private equity continues to have all sorts of privileges and luxuries extended to it, including by the current government. So, how are those moves justified?
And I just want to very quickly pick up on Kate's point about I think that you're right that public companies also deserve a lot of scrutiny. Enron was a public company. It didn't really do it much good. So I think that is ultimately, yes, absolutely true. To me, it feels as though there are sort of a number of narratives that is the word propagated or just spread or whatever, in a way that's quite often not questioned and often accepted as a kind of version of reality. And when you start to interrogate them, they kind of fall apart. And one of those narratives that I became really interested in when I was looking at the history and the kind of antecedents to the emergence of private equity in the 1980s, I went back to the 1970s and looked at some of the kind of renegade financiers and politicians, neoconservative politicians, particularly in the US, who really believed in this as a kind of way of breathing life back into what they saw as a sort of sluggish form of capitalism that had emerged in the post-war period. And they were really hawkish when it came to deficit spending or the use of the kind of state's balance sheet to basically fund various forms of social improvement. So ever since the sort of long 1960s, there had been this tendency to try and use the power of government to basically do things that would improve people's lives without wanting to be too romantic about it. And actually, there was a small group of people who felt that had gone much, much too far, and the government really needed to be reined in. And that actually what they were trying to do in some ways was roll back the protections against capitalism that had been created during that post-war period and that kind of New Deal period, particularly in the US. And I think what emerged from that and what we still live with today in Britain is this dichotomy between public austerity on one hand and private extravagance on the other. And, you know, you mentioned Thames Water. I think that that's a perfect example of this in the sense that we're now living in a situation where we have the kind of ruination of one of the key services that so many people depend upon, combined with massive amounts of leverage that was taken out in order to enrich a small group of investors, financiers, and so on. So that's definitely one of the narratives that I think has been generally accepted by politicians in a way that is quite convenient for private equity and more generally private capital. I think there's a couple of other things going on there, and I sometimes think about the chief lobbying body in the UK for this industry, which was formerly known as the British Venture Capital Authority or Association. And ever since the 1980s, there has been in Britain in particular this real mistake made in mistaking leverage buyouts or the buying up of existing companies and loading them with debt with something that is much more kind of in the minds of politicians desirable, which is venture capital. And speaking to people involved in the new Labour government who kept using this phrase, we just wanted to get Britain's answer to Silicon Valley. We just wanted to have that kind of industry here in Britain, which is partly why we kind of welcomed in the fund managers. And when you actually look at the data in terms of the type of industry we have ended up with in Britain, it is not Britain's answer to Silicon Valley. It is an industry that buys up companies like WH Smith and Claire's Accessories and Morrison's and loads them with debt. And since then, the lobbying body has renamed itself. I'm now going to forget its new name, but it's something like British Capital. And I think that speaks to the way in which the narrative has morphed. It's no longer about this kind of Schumpeterian idea of injecting entrepreneurialism and creative destruction into the British economy. Now it's about providing an alternative to state spending, given that there has been such a widespread acceptance of public austerity. And so the idea that private capital will step in to do the spending that the state isn't willing to do because it's not willing to deepen its balance sheet and has tied itself in knots with these kind of fiscal constraints. And so I think that's another of the narratives now that we're really seeing. And again, I think Kate's work has really spoken to that. I mean, in terms of the, you know, you've written about how that kind of model has also been exported overseas in the global south and so on, where actually there's even more vulnerabilities compared to a country like Britain. So that's my answer.
And you mentioned how, did you want to come in on that? Sorry, I wasn't sure if you were jumping in.
Well, I just on these kind of fiscal rules, and a big thing on private investment is that we still pay for it. That's the thing. It's like, it's not public and private investment are not substitutes. You can spend public money to tax-funded money. But if you have private money, it has to go out again. This is something I talk about in the book, and it's just such an obvious thing that doesn't seem to feature a lot in policy. So like with water, we are all paying for it already, so we don't need it to come from the government. We could still finance it. And if we financed it with our bills, we're not paying dividends, it would all be, it'd be enough money to pay for it all. So the government's narrative that it's going to take money from health and education is really it's a really key political message they're trying to send out there that's really not right.
Very well put. I want to come to housing quickly because I'm conscious of time and I want to make sure we can ask questions. And I think for both of you, it's maybe at the heart of both of your books, I would say, in many ways. And I guess there's a real kind of never-ending debate in British political and media discourse about how to solve the housing crisis, and lots of people who would argue that the answer is simply that we aren't building enough houses, and certainly that's a part of it. But I wonder if, I guess the question I put to you is it really that simple? And in the context of the types of ownership models that we have, are there other things that we also need to fix alongside of that to really resolve a crisis in affordable and accessible housing? And Kate, I'll start with you. And Hattie, I wondered if, as part of that, you could talk maybe about your experience reporting in Denmark.
Thanks. Well, to be honest, I was quite niche to housing when I started working on it for the book. And I was quite baffled by this policy of house building because, well, I know people have worked on this in the room as well. But if you build houses, prices won't come down. House builders won't build houses that are going to lower prices. I was reading that they'd be happier to give you free carpets and curtains rather than bring the price down, because falling house prices has all kinds of issues, not least for the house builders trying to sell them, but also people who've just bought houses. So it's really complicated. But more than anything, it just seems to me from what I've read, we need social housing. I mean, social housing is, this is what I was saying before about how meeting social needs now needs to be mediated through what suits private sector investors. So social housing has morphed into something called affordable housing, which is actually not affordable at all. It's something that's, I think it's 80% of market rents. So it's a discount on the market rent. So it's not to do with incomes, which is what social rent historically has been, and obviously should be if it really is about social need. So really, I think the focus has got to be on building council-owned housing. It's like, oh, what a great idea. It's genius. I was talking to someone from Brighton Council. I'm from Brighton. I was talking to someone from Brighton Council the other day, and they are, I think, spending something like 50 million to buy back houses. Though I think 200 homes they want to buy. I can't remember what the figures were, to be honest. I'm trying to work out the maths there. But anyway, they have a big program to buy houses for them to be council owned. And mostly they're buying back properties that have been sold through the right to buy program. So that seems to be the only way that we are going to solve the housing crisis, is to have council owned properties.
Yeah, and I think it's so fundamental, actually, if you're looking at something like the cost of living in Britain, which is such a politically explosive issue now, that it feels as though there are solutions that are so obvious and in a way simple, which is just, building actually decommodified social housing. And I think that would go a long way to resolving quite a lot of the political problems that we now are encountering. I spent quite a bit of time, in Denmark, reporting on a housing campaign that had really taken the country, and particularly Copenhagen, by storm, because a number of housing campaigners and tenants had managed to successfully introduce something called the Blackstone Law, which was basically a sort of way of beating back the incursions of asset managers into the city. And it's not a perfect example of solutions, because many Danish pension funds are doing exactly the same thing that US private equity funds are doing. So there are many complexities there. But I thought it was a really interesting kind of counter-narrative to that, which we often hear, which is that this is a kind of ineluctable process that is impossible to thwart. I think whenever you're reporting on one of these subjects, you get often you go through a very long right to reply process, which is where you ask companies, I've heard this happened, my reporting told me this, what do you have to say, is this correct, and so on. And then you also get a very long legal letter saying we will, we take issue with this and so on. And I think one of the narratives that I often have encountered is this idea that we're fixing this housing crisis because we're providing more supply. And on the surface, it sounds great. You're like, yeah, more houses, of course, that's going to solve the problem. Or, more apartments, if you're talking about Europe. Obviously, we know that's not the case. And we know that's not the case in particular because such investors tend to target places where there is a rent gap, i.e. a difference between what is currently being charged for rent and what could potentially be charged. And the idea is to basically make up the difference. And I think it's interesting in Britain because of our deeply fragmented private rental sector that some of the models that we've seen elsewhere, or some of the trends that we've seen elsewhere in places like Berlin and Spain and Copenhagen, where institutional investors, private equity funds, and so on will buy up many, many apartments at once. Actually, Britain's fragmented and quite unprofessional private rental sector, dominated by lots of buy-to-let landlords, is almost a kind of guard against some of those things happening. Where that is happening is in contexts like student accommodation and in build-to-rent. I think it's really interesting when you look at some of the prices that are charged now for student accommodation that is owned by such investors. I was looking at a flat recently in Edinburgh, a studio flat rented to students, and figuring out how much it would cost if you were to rent it for the 10 months of the year that you're at university. And it greatly exceeded the total amount that your average student in the UK would get in that form of their loan that was supposed to cover their entire living costs. So you're kind of wondering, that's actually having a really tangible effect on potentially helping to drive up the price of accommodation, but also putting university out of reach of more and more people if things continue to, if unaffordability continues to be priced in that way. And as we know, housing costs just keep going up and up, way above inflation. And it seems as though, to me, a really cynical way of putting those things further and further out of reach of people who need them.
But also, I think private equity is getting more involved in the rental sector. So I've read things from people, Blackstone are now kind of investing more and more in build to rent, which has traditionally been like accommodation for single people who are like in apartment blocks. But they're now investing in SFH, single family homes. So families are much better renters because they have kids at school, so they don't move so much. So they see that as a booming investment because people are unlikely to be able to afford to buy a house. This is a big marketing thing it's a big business for companies who are planning to provide a rental for people forever, which isn't really in the social interest, I don't think.
So we've just got a couple minutes left before we open up to everyone for questions. And Kate, I'll close with you. And this is the inevitable, impossible, solve all of our problems question. So I'm going to apologize in advance. But I did wonder if you could talk a little bit, maybe just about, I guess, the political strategy about how we begin to go about unpicking the system. There's so much at hand, so many of the kind of vital sectors that define all of our lives and our collective well-being. And so it's this kind of Herculean task. And if you were to kind of design a strategy for how and where to begin, what would that look like?
What would we do? I think the first point to really emphasize is that the UK is an outlier. The UK is extreme. So nationalizing public companies isn't a radical, crazy plan. Like what we have at the moment is radical. So most countries in the world have publicly owned water. No one's copied our extreme model of privatization. Public ownership of energy networks is common in Europe. And other countries have much better regulation of housing. So it's not like an outlandish policy. But politically, it's quite a challenge to say we're going to sort of nationalise everything. But I think we could start. I mean, privatisation was never set out, I don't think, in Thatcher's first manifesto. It just happened sort of incrementally. So I think Thames Water into special administration is where we start. And then from there, I think we can expand. But it's also changing mindsets as well. Private sector is not efficient, not effective. Public sector is not necessarily bureaucratic and inefficient. yeah, I think we also need to learn from the best in the world. There's fabulous examples that we could look to devise really brilliant services, universal services that are sustainable and equitable. So we need imagination and ambition. Yeah.
And many of those examples are in the book. It's my sale to you. Well, I think that's a great maybe place to leave it from questions for me, and that gives us plenty of time for everyone here to ask questions of both of our speakers. But first, maybe a quick round of applause, and then we'll